Hello friends, Namaste, Namaskaram. This is Sahavi Reddy and you are watching Investors Time, a channel where the boring financial numbers are translated into beautiful pictorial forms so that it is easily understandable and you can make your decisions also very easily if you have to take this company or not. And in this video, I am talking about IOL Chemicals Limited operating under pharma and health sector. And straight away we will start with the Buffett rule, and these blue lines, which are the recent sales growth, has grown by 71.4%, while EPS has grown by 744%. And Buffett says that you have to pick a company whose growth in terms of sales or EPS or net profit, whatever it is, the 3 years average has to be greater than the 7 years average or 10 years average, and that is where the slide has come out. So the 3 years average for this company is about 33.3%, while 7-year average is 19.6, which is actually good. And even the EPS has grown by 268%, greater than the 83% of 7-year average growth. I mean, you can even see the operating profit margins. The last 3 years average has stood at 18.78%, while in the last 7 years it stood at 16.36%. Coming to the returns, you see the trend mainly till 2018. You can see the trend, and I'll mention you right now in this whole presentation for this video. You see mainly till March 2018. I mean the trend. Then you can consider the 2019 for a different reason. So if you see here in return on equity, which is the blue line, it has gone up from minus 33 levels to almost 50%. And in March 2018, it stood at 12.83, which is good because it has grown from 2.47%. And the return on capital employed, which is the red line, you can see from 13.15%, it has grown to 16.43%. And in financial 2019, it has grown almost to 40%. And even the return on assets, they have improved from 0.57 levels to 3.37 levels. Then it has grown to almost 25%. And if you have to look into the balance sheet of this company, the reserves have almost doubled. You can see here in 2018 it is 159.5 and it has grown to almost 417 levels, almost double. And at the same time, the borrowings also have dropped from 420 to 450 levels to almost 258 crores of balance sheet. Borrowings. And because of this, you can see the debt to equity, it has fallen from 6.8 levels to 0.95 levels. But till 2018, that was also good because it has fallen from 12.3 levels to 6.8 levels. In the same time, the current ratio has actually gone up from 1.92 levels to 2.39, which is actually good. And if you see, it's not a good cash rich company. It has generated good amount of cash flows in 2018 and 19, like 120 crores. But it has lost in investing activity and in financing activity. So net to net, it doesn't have any cash. That was just an introduction, and in this video we will be actually looking into several things. We'll do a KYC, we will look into the business model, what this company actually does. We'll see the shareholding pattern, revenue segments, then returns, efficiency, and also sales and EPS. So coming to the business model, this is a small cap company established in 1986, operating in pharma and health sector. This is one of the leading generic pharmaceutical company. It is into bulk drugs, food additives, reactants, and solvents also. And coming to it has very wide presence across therapeutic categories like pain management, anti-diabetic, anti-hypertensive, and anti-convulsants. And it does also some joint ventures and strategic alliances with the global partners. And this is into several sectors that we will see, but the most important thing is that every product is in compliance with the EU and US FDA standards. The milestone, it has started in 1986, and we will talk more about the ibuprofen and its the news about the ibuprofen in later charts. But besides ibuprofen, it also has many other products, like in 1991 it started acetic acid, in 96 ethyl acetate, and 1999 acetic anhydride, and then in 2009 it started isobutyl benzene, monochloroacetic acid, and acetyl chloride plant. So it doesn't have only ibuprofen, so it has diversified its portfolio. And this exports to several customers like Bangladesh, Thailand, UAE, Syria, Singapore, etc. And coming to the clientele of this, besides Ranbaxy and Cipla from pharmaceuticals, it is actually into many other companies like Flex Industries, ICA Paints, Asian Paints, Pidilite, Rallis India, Hindustan Polyamide, several others. So speaking about the product portfolio, there are two segments. One is active pharma ingredients, APIs, wherein the pain management and lifestyle drugs are catered to. And in this, they are actually focusing on generic product development and also cost-effective commercialization. Already 6 APIs are already commercialized, and 10 other APIs are in the advanced stage of development. And coming to the specialty chemical division, it produces ethyl acetate and acetic anhydride, whatever we saw in the milestone of this company. And this is used in various end markets like flexible packaging, pharmaceuticals, textiles, food processing, pesticides, and paint industries. And if we have to do the revenue segmentation in between these two segments, the contribution till March 2018 is like the bulk drugs has gone to 60.4%, while chemicals has contributed about 35% of its total sales. And if we have to speak about the overview, some numbers, the market cap stands at 1,218 crores at 214 rupees. And this price is very important because every day the price changes and we don't know when you are watching this video. And coming to the EPS, it generates about 42 rupees of EPS, and book value is about 83.38 with a face value of 10 rupees. And these numbers are very fancy, but they don't tell anything about the company. You don't know any picture, but if you translate these into valuations, you get a better picture of how this company is doing in that sector. The market cap per sales ratio stands at 0.72, which says it is undervalued stock. And the stock PE stands at 5.15, while the industry average stands at 27.92. And the PBIT ratio stands at 2.57. And this is the only parameter which says that it is actually overvalued stock when compared to the book value. Even the PEG ratio stands at 0.07, which says it is very undervalued stock. And since we are looking into the valuations, let's directly look into the technical analysis of this stock and how it is doing. This is a monthly chart. It is better to do a top-down analysis in the beginning to see how the company is doing. So I'll start with the monthly analysis, and I use MACD, RSI, and Ichimoku chart. I have some trend lines. But you can see clearly here is that this is a historic high number. If at all we have to pick this stock, it will be an open target. We cannot give what is the resistance levels of this stock. But one thing you can clearly see is that these 4 wicks, which says that there is huge selling pressure at around like 210 levels to almost 225, 230 levels. I normally look into the MACDs, monthly MACD. This is my favorite actually. If I have to get into a multi-bagger trend, then this is the one which actually gets me a good picture. And the MACD line, whenever it is near the zero line, either coming towards the zero or it has crossed zero, that is where I am interested in. And now the MACD is very high, which says that the stock has to retrace a bit. And if the stock has to retrace now, it might go to almost levels of 160, 150 levels, which is almost like 20% drop from the current price. It is not much advisable at these levels, or at least there has to be lower wicks, many lower wicks, which says that there are many buyers waiting here, and it could act as a good support zone and you can actually get into the stock. But now we don't see any wicks, lower wicks, which says that there is some buying pressure here. So let the stock correct for more. This is a monthly chart, so it will take 2-3 months to get the next picture actually. I'll take a weekly chart so that I know the structure of the company, like where are the buying zones, where are the support zones. And you see, we were talking about the wicks, and you can clearly see there are inverted hammers at the stops, which says that there are huge sellers. And unless this the stock moves above this 230 levels, we cannot actually get into this stock. There will not be any another leg run of this company. One good thing is that MACD has come down to almost 0 levels. Let it come down more. Histograms have also turned into positive, which is a good thing, but still the stock might fall down. Cloud is a most important thing. This acts as a strong resistance line, support line after the Kijun. Here everywhere you can see that the Kijun has been acting as a support for this stock. Usually when it is already in a trend, you have missed the monthly MACD near the 0 line. Usually what retail investors do is that they'll see some news, or they'll see some fancy news and some YouTube video, and they'll get impressed and they'll buy the next day early morning at 9:15, 9:30. So you shouldn't do that. No matter how much good news you have to wait. You have to put your buying price only near the Kijun levels if it is a trending one. So now if the Kijun is broken and if it is sustaining below Kijun, then it definitely will drop to cloud line. And mostly near the cloud line, that is a very strong support. Even when there is a breakout, you have to wait till it touches, or when it comes near the cloud line. Since it may retrace a little more, it is not advisable to take this stock, but you don't give up on this video. Just look into the numbers so that you will have a fair idea about this IOL Chemicals Limited. And coming to the daily charts, usually when I finally pick the stock, when I feel that monthly or weekly charts look good, I get into hourly chart and 4-hourly charts. But here we will discuss only the daily charts. You can clearly see the MACD has crossover, and the histograms are also negative. Once it comes to the cloud line near 180 levels, 185 levels, then at least you can look into this, taking the stock with whatever your potential may be, maybe 15% of loss or 10% of loss. You can actually pick this stock. Let us even see what is happening in the hourly chart, if the chart is doing any good. So this is the hourly chart. Going a little back, you can see how the zero line rejection happened here. We were supposed to talk about the zero line rejection in monthly MACD, but it is almost the same. Whenever they usually in monthly and weekly charts, if at all MACD emerges out of the zero line from negative to positive zones, I'll just wait to do a zero line rejection like this. I mean, it has to go up and then come back down, test the support levels, come near the zero levels, and then make a crossover. I mean, not a crossover, it has to make a U-turn, which I call it as a zero line rejection. And this is a beautiful level to actually pick the stock. And at the same point of time, you can also see that it will also test the support on the cloud. It happens many times. It even happens in the 15 minutes chart also, where from this levels, like even if you can pick the stock at 185 levels, then you will go to 230 levels. So this is one kind of only for 1-2 days. But if you do this same zero line rejection phenomenon in a daily chart or a weekly chart, it will be a positional call for almost like 2 months or 3 months. Then that is actually a good one. And after the new highs, the stock has come to cloud levels, and then it has taken a support here. It has given opportunity for the fresh buyers who have picked the stock here. This retracement to the upwards, this is a beautiful time to book your losses. And now it has gone down the cloud levels, and unless this in the hourly chart, unless this Kijun is broken, the first resistance line for this stock right now, unless this hourly chart Kijun is broken, it's not worth picking. But if it crosses, then it is a good positional call for this company. So this is not an advice right now. I'm not an advisory department. I just started this company so that whoever is a small investor like me, I just wanted to help them with whatever research I'm doing on. So coming to our evaluations, the shareholding pattern is like 41% are held by promoters. Generic public has 24%. Foreign institutions are 1.76%. Good thing is that it has not pledged any share, but you will not get any dividends as well. And coming to the solvency, debt to equity stands at 0.54, current ratio stands at 1.9, and interest coverage ratio is 7.54, which says it is a fair amount good value. And the ROAS stands at 40%, ROI is 50%, and return on assets 25% just for this financial year 2019. Speaking about the efficiency of the company, the quarterly growth margins, they have improved a lot. You can see from almost 11%, it has gone up to 37%. And here I think it's the right time to speak a little about ibuprofen. So what happened in June 2018 is that the Bishop plant of BASF has actually shut down. There was a huge shortage for the ibuprofen product, and that's where whatever company was actually producing ibuprofen, like even Vinati Organics, they have almost doubled. You see the levels, the price levels of this company and Vinati Organics. That one, I think from 900,000 levels, it has gone to 2,100, 2,200 levels. And this company, even from 8,500 levels, it has gone to 225 levels. So, it usually turned 2 times in just financial year 2019. And that is where you will also see that, the numbers are hyped in this financial year 2019. And when the sales numbers are good, when they actually go up, even the margins go in proportionate. This margins, I love it very much when I'm looking into a company. First is Buffett rule and then the margins. Just for one reason, this speaks very high about how well the management is performing. You will know how management is utilizing their resources, and how margins are. So even if you talk about the yearly growth margins, they have gone up to 24% of operating profit margins and 14% of net profit margins. But if you see till 2018 levels, it from 2.9% in 2015, it has gone to 12.7%, like 13% in March 2018. And one good thing is that just in 2018, the net profit margins improved from 0.7% levels to 2.8% levels, which is good. I mean, maybe before the BASF news came in June 2018, and this shows that, even before the news, the company made a little turnaround. And if we have to speak about the other efficiency factor, which is like debtor days and inventory turnover is beautiful. From 2.7 levels in 2017, it has gone to 4.7 levels in 2018, and then it again doubled to 9 levels. And coming to the debtor days, once it was about 58, above 50 levels, it used to take about almost 50 days to collect the revenue after selling its products. Now it has dropped to 43 levels, which is actually good. And if we have to speak about the revenue segments, we have talked that, there are two segments. So coming to the chemical segment, they have grown from 140 crores to 194 crores. But there is a sequential degrowth, like 11% of degrowth. This is about the specialty chemicals division, which is not where the ibuprofen is not included. But if you see into the drugs revenue, you can see that 182 crores there has been an improvement to almost 314 crores. But in this particular March 2019 quarter, it has degrown by almost 8%. This could be for one factor that it was shut down in June 2018, but the inspection was done in August or something, and they were about to start its production in the late 2018. There is no particular news as such in 2019 that they will start, but I'm sure that the inspections were started in late 2018s, but I don't know about the production. But there is one more important news. One thing, this company itself, they want to actually expand its capacity in this Bishop plant, and also they want to start one more plant in Germany, for which they have applied for regulatory approvals. And one more SI group, which is another major company which produces ibuprofen, that also has increased 25% in 2018, when in the previous year it increased about 10% of its capacity. If we have to see the PBIT of these two segments, the chemicals, they have gone up from 1.55 crores to almost 13 crores, which is good. And the blue color line, which is the quarter-on-quarter growth, it grew by 95.7%, which is actually very good. And see the margins, they have gone up from 2.5 to 3% levels to almost 6.5% levels, which is also very good. I mean, even the margins segment, they are actually improving. The company is doing well. Coming to the drug segment, though the sales has fallen in this March 2019, sequential growth was there about 17%. And coming to the margins, it has shown a sequential improvement, beautiful improvement from 12.7%, 13 levels to almost 48.5% levels. And speaking about the sales of this company, obviously the quarterly sales will look good, and March 2019 quarter has fallen a bit, but make sure that in the next 1-2 quarters, see if these are flat numbers or they will go down. If at all the sales numbers are going down, accordingly even the margins will fall down. And coming to the yearly sales, you can see it's a historic high number, like 1685 crores, almost double from 983 crores, showing a growth of 71%. But see till 2018, from 2015, which was 385 crores, it has improved to almost 983 crores, which is like 3 times, probably not 3 times exactly, but till 2018. And this speaks, like from 2015 to 2018, excluding the ibuprofen shutdown, this company is performing well. That you can see even in the EPS generation also. From here, you just look only till 2018, but we will also see into the 2019 numbers. So coming to the CAGR growth, the 3-year CAGR growth, obviously because of this one financial year 2019, it will be 33.4%, which is higher than the 7-year CAGR growth of 19.6% and 10-year CAGR growth of 17.1%. And speaking of the expenses of this company, first thing, raw material costs and employee costs. The orange color line, which is the employee cost, they have gone down from 6.4 levels in 2015 to almost 5.7% in March 2018, which is good, okay. But the raw material cost contribution is more in the expenses segment. So it has gone down from 78 levels to almost 62.7%, which is actually very good. And speaking about the interest expenses, they have actually reduced their debt. So quarterly interest payments, these are the interest payments which they do on their obligations. So this is not direct borrowing number. So these are the just interest payments which the company does. And you can see the left side, the quarterly payments, they have gone down from 15.8 levels to 8.83 crores in March 2019. Even in the yearly segment, from 67 crores in financial year 2017, they have gone down to 51.42 levels, which is very good. And speaking about the net profit of this company, after all these expenses, the quarterly net profit stood at 101 levels, which is good because of the margins. They have actually shown a growth of 23.6% and a year-on-year growth of 784%. And speaking of the yearly profits, just in financial 2019, they were like record levels of 236 crores, and that is the reason, it is almost 10 times of incremental profit, and that is where, they have reduced their borrowings. So it showed a growth of 755%. But till 2018, just see the levels. In March 2015, it was actually minus 66 crores, and they have almost gone up. Before the news itself, they are generating about 27 crores of net profit. And if you have to speak about the CAGR growth, it is 270%, higher than the 7-year average of 104%, and 10-year CAGR growth of 37%. And if you have to speak about the standalone EPS, if we translate the same net profit into earnings per share, they have improved from 2 rupees to 18 rupees, showing a growth of 23.6% sequentially. But it is more important to see the yearly EPS. Hoping that you are all investors. So, it has gone up from 4.9 levels to 41 levels, an increment of 744%. But you can see from 2015, like minus 14 rupees to 4.9, which is like 5 rupees levels they have gone, which is very good. So this is all about IOL Chemicals Limited. This video I have made it even in Hindi version, but there was a request from one particular friend, Madhun Kumaran, saying that he wants to understand better and he wants an English version, and that's the reason I have made this this video. If at all you like this video or the company, please hit the like button and don't forget to share with your friends. If at all you have not subscribed yet, please do subscribe to my channel, and happy investing, stay healthy, God bless you.